So hi there traders, this is Steve Miley, the market chartist for FX Explained, and here we're going to take a look at the risk currencies. Now if you want to know a bit more about the risk currencies, we do have an article out there on FX Explained. You can click the link below. Which forex markets and currencies should I trade? So take a look at that one on FX Explained. The link is in the text below the video in here. So take a look at that if you want to know a bit more about risk currencies and generally about the forex markets overall. So what's been going on in here? We're very much in risk on mode in here. Equity markets are surging. Why is this happening? An expectation of a Biden victory. And why are the risk currencies and why are global FX markets moving higher, and what currencies moving higher against the US dollar? Well, it's because in here we're in a risk on mode. There's an anticipation of a more conciliatory tone from Biden on foreign policy and trade compared to Trump, and that's seen as a positive for the global market, positive for global currencies against the dollar. And the US dollar is selling off. Remember, the US dollar is seen very much at the moment as a safe haven, so we're seeing particularly these risk currencies, the Australian dollar, the New Zealand dollar, the Canadian dollar, doing particularly well in here against the US dollar in here. Remember, we still had the backdrop of COVID-19, surging deaths in Europe, surging deaths and hospitalisations cases in the US in here, but we are seeing in here more control in Asia. So again, Aussie and Kiwi doing particularly well because they've got a little bit more under control in here on the COVID side. Markets in here certainly pushing high. So here we see Aussie dollar taking out this 72.44 level, having reversed early this week this counter down trend line in here, and very much in a more bullish tone in here, aiming higher. We could be up here by mid-November, 74.13, the multi-month cycle high. So a more bullish tone certainly there in here at the moment. Similar story in here for the New Zealand dollar as well. We had this potential head and shoulders top pattern forming on the New Zealand dollar. That got completely rejected with this surge higher in here that we've seen this week. And now the market again look very, very, very close to this cycle high. We're actually now prodding right now, just prodding up close to that cycle high. We've been at 67.92. We're only 6 pips from the cycle high at the moment now. So 67.90 above there would open up significant upside risk as well. And finally in here we're going to take a look at the US dollar versus the Canadian dollar in here. Market plunging lower in here for US dollar, Canadian dollar, and that's certainly signaling a more negative US dollar tone, a more positive Canadian dollar tone. Look, we're sitting right at this again multi-month low here at 129.90, and if I zoom out a bit further in here on a daily chart, you'll see in here this low from the beginning of this year, 129.48. If we take that out, then we're going to a multi-year low for dollar CAD in here. So all of this pointing very much positive for the risk currencies, negative for the US dollar, and we're looking for more of that to come through going into today and then potentially on through into mid-November. This has been Steve Miley, the market chartist for FX Explained. Thank you so much for watching. Now, if you like what you've seen, please do hit that like button and don't forget to subscribe to our YouTube channel. And as always, have a great trading day.